High mortgage rates are temporary, but Wu-Tang is forever. Alright, okay, something new for today, bringing you value as I would say. So what I got to talk about today is going to be the levels to the business game, looking at everything from really the startup to taking a company public. And it's good to know this because, a lot of people I feel like kind of had the idea of maybe starting a business one day, doing some kind of side hustle, something like that. I mean, who doesn't want to have a business that they enjoy doing that's based around something that they love to do every day instead of working at a job, doing what someone tells them to do? So that's why I think that it's important for you to understand what I'm saying. So, all these levels before I start are not really like definite. Like, if you get into the business game, it's not like you have to take your company all the way to the final level where you're going public. I mean, just understanding how these different levels work can really give you a good idea of like what your objective is, what your intentions are when you start out, and really, what direction you want to go. Maybe you want to sell your business like at halfway through the levels and you don't even want to go to the top level. Maybe you're happy at a lower level, just like running your business, making just enough to support yourself and putting in the minimal time. It's all about understanding the levels to this business game. So I'm about to unload my mind about what I know. Here we go. Alright, so if this is something interesting to you and you like the information I bring, make sure you go and do the thing where you hit that button that says like and subscribe, because I'm bringing new information, and also there's a link to a mailing list where you can get more detailed information, really anything trying to get you where you want to be when it comes to money. Alright, so first thing I'm going to do is just an overview of every level I see, and I'm not even going to talk about where is the place to be. I'm just going to break it down, and then I'm going to cover each one individually, and you can really make up your own mind as to where you want to go. First, you've got, before the business is even started, you've got, just basic research, everything you got to do to really like planning stages for a business. The next level would be actually creating a business plan, having something on paper that, is really clear about what you're trying to do and where you're trying to go. Then you've got the legal structures, forming your business, creating a legal business so that the business carries the liability. There's other reasons too, depending on like how many people are working on the business with you. The next thing you got to do after that is get any kind of legal permits, any kind of licenses that pertain to whatever it is you're trying to do. In some cases, this might not obtain to you, but if it does, it's just another step. Then you got funding. Is this funding going to come from you? Is this funding going to come from other people? What's your funding plan? What's your strategy to get money to run the business? And this is all going to be determined by your business plan, because that's going to set out how much money you think you need, how much your operating expenses are going to be. Next level is going to be to go ahead and set up all the operations. Really like start running the business. Get things going. Get everything in place. Because the level after that is to have the product or service. So once everything's running smooth, you can get the product or your service out, which is really going to be the thing that generates the income for your business. The next level would be to go ahead and market and sell your product. Go ahead and put it out on the market. Get it in front of your potential customers, the people that you think would be most likely to benefit and buy your product or service. The next level is really financial management. Once the money starts coming in, you really got to have a person who knows what they're doing when it comes to books, when it comes to taxes, and when it comes to just like managing the cash that you have on hand to run the business on a daily basis. So once your business is making consistent profit, the next level would be to expand. Whether that's like, you're online, and that just means like more products or services, reaching out to a different set of customers. Whether that you're in a brick and mortar, like a physical store, you can buy, new storefronts, reach out to other cities, other areas where people might not be able to access your product or service. The next step would be, if you want to keep expanding, to do research into doing an IPO, initial public offering. This would be taking your company public. The next level after that, if you decide you want to take your company public, you want to get a team of advisors and people who can really make this happen for you in your business. So now you got all the right people and you got the plan in place. The next step would be to make sure that all the legal diligence, paperwork, all the T's are crossed and the I's are dotted. It's going to be cheaper to get it right the first time instead of having any mistakes that might come up later. The next level would be to do the pricing, the underwriting, really, get a value on your business, what kind of, financial needs that you're going to have in the future, what kind of growth you want to have, so you can have an idea of, really like what kind of money you're trying to have access to. The next level would be what they call a roadshow. You're basically just like going in front of investors and trying to raise money. This is not always a step that people need to take. Most businesses, they really can't afford to, go public. So this is something they got to do. The next level is the IPO, the pricing and the allocation. Just, once you've got everything set up that you can go public, you just got to get the price, what you're going to, charge for the shares. You've got, first round, different rounds of shareholders at different prices. And then you've got a specific price that you want to set for when you, go public, when your stock is first for sale. And the last step is putting your business on a listing. Having that stock on a stock exchange where people can go and buy it. So yeah, breaking down all the levels is important to know that really there's like a halfway point where it comes to like getting your business going and then deciding to take that business public. And me, myself, I have not ran any businesses yet that I've wanted to take public, possibly in the future. But I think that there's a lot of pros and cons to going public, and the cons have outweighed the pros for me so far. So I'm going to get into that too, so you can have a better understanding of, why it might not be the best idea really to want to even go public. So the first con I would say to going public is all the fees that you're going to have to pay. There's going to be a lot of fees as far as hiring people to help you go public, as far as paying. You got to pay a fee just to get on the stock market. You got to pay advisors fees. There's all kinds of, especially depending on the size of your business, what exchanges you're going public on. So you've got investment banking fees, you've got legal fees, you've got accounting and auditing fees, you've got the registration and filing fees, you've got the roadshow and all the marketing, getting in front of investors to, show them your business plan and trying to raise money. You've got fees just for getting on a listing on, each specific exchange you want to be on. And then on top of that, there's no doubt going to be some, random fees that come up that you had never expected in the first place. So, a lot of people can have a budget going into going public and find out that they go way over their budget. So yeah, just to deal with the investment bankers, they're going to want about like, maybe 3 to 5% of whatever you make off the IPO. Legal fees can be some of the most expensive, averaging about $1 to $2 million for a business to, get the legal representation they need just to go public. This is not even like a day-to-day business, legal fee. This is just for going public. So before a company or a business goes public, they have to have all their financial statements ready so that all the regulators can make sure that nothing shady is going on. And just to get these financial statements to where they can be accepted by these regulators, it's going to cost anywhere from like $250,000 to $1 million. So yeah, there's filing and regulatory fees. So there's mainly to like the SEC, Securities and Exchange Commission. Their role is to really keep consumers safe, so they don't lose their money in bad investments. So they want to make sure that anything that's going public, any business, any company is really legit. And you have to pay them somewhere between like $50,000, $100,000 just for them to do their job and make sure that your financials are actually legit. The next one I think is really like you got the most room to really like budget with this one, and that's the roadshow. You got travel expenses. You've got a team that you're going to be paying for their travel and everything like that too. Really like the bottom range that businesses are paying is kind of like $100,000. Some businesses are paying over $1 million when they do this. This is one area where you can do some budgeting and save a lot of money. Whereas a lot of other areas, it's just set fees. Like the regulators, like you can't like really give them less than they ask for. You got to pay a fee to get listed. You can't like negotiate with that really. So yeah, I think this is the one area where you can find the most room to negotiate. Depending on what exchange you get listed on, it can cost anywhere from like $100,000 to like $1 million just for them to, list your stock. And I would say for just random miscellaneous costs, expect to have at least an extra $100,000. So yeah, as you can see, just taking a company public is going to cost millions of dollars. And that right there can be a big enough reason just for a business not to, really want to do it, not even looking at all the time that it's going to take. So that's why really when you get to that step where your business is profitable and you're making a lot of money and you want to expand more, it's really important to really analyze your situation and whether it's worth all the cons and all the risks and all the money and all the time that goes along with going public. So looking at all the the negative side of this and understanding really what it all is about, like probably people are asking, like, why would you even want to do this in the first place? Well, there are some benefits and I'm about to talk about those. The first one and the main one being access to capital. So yeah, I mean, you can go out and you can find investors and everything like that, but if you have your business listed on a major stock exchange, that's gonna put you in a spot where you have access to more capital, and capital is gonna be coming to you. The next benefit I would say would be it just gives more credibility to your business. It would make your business look more legit. Once you get listed in a major exchange, then a lot of people view it as like, okay, well, this business wouldn't have been able to get listed on this exchange if they weren't doing something right and if they weren't legit. This can also benefit employees. If you pay your employees through stock, a lot of companies that get started, they might not be able to afford to pay employees. So they'll offer people to do work in exchange for, basically stock in the company, or different variations of that, different variations of paycheck and stock, whatever that business wants to do. So yeah, if you have employees that you want, the top employees to be really like doing their best for your business, sometimes that can really benefit you to pay them through stock, because then their work directly impacts the amount of money that they're going to make from that stock. And once you're going public, if you have employees that have that stock before you go public, in most cases, by the time that stock actually goes public, it's going to be worth a lot more than when they originally bought it or earned it. Yeah, this is also going to open up a lot of doors when it comes to debt. Taking on new debt, a lot of banks that would give you more credibility, other organizations, other investors. As I've seen, a lot of major companies that are on the S&P 500 have failed. In most cases, somebody or some entity will come in at the last second and offer to buy them out just so they can keep their business going, or offer them some kind of loan or some kind of way to really like keep moving. So yeah, I mean, the main thing being with taking your company public is going to give you access to a lot more capital so that you can really expand the business more. But once you get to that that level where you start to go public and you become public, then you're going to find a lot more challenges for your business that you wouldn't have. And this is the second main reason really that I've never wanted to go public, because I really want to have control of my businesses. And I personally would rather, at this stage in my life, sell a business than take it public. And I think maybe in the future, once I've already kind of mastered all the other levels of the business game and I get a business going that I think really has massive potential and it would be worth it to take it public, I would be open to that. But right now, the businesses I'm working on, it doesn't make sense for me to go public with them, and I would rather just keep them, on the levels below going public so that I can avoid the things I'm about to talk about right now. First one being regulatory scrutiny. So once you're public, you've got all kinds of, as I was talking about, regulators and like the SEC that are going to be watching you now, making sure that, once you're public, that you're following all the rules. So you basically got to be on point. Like, you got to be so careful what you do once you go public. It opens up a lot of scrutiny, and it opens up a lot of mistakes that can be made that can be extremely costly that just wouldn't be there if you had never gone public. You've got reporting requirements. Basically, you have to make sure that financial information, business information that really wouldn't be nobody's business if you weren't public, that you have to have all that ready for regulators to make sure that, they can allow you to keep running. Got disclosure requirements. There's certain things that, you just have to do on a certain time frame that you wouldn't have to do to keep your business running if you had never gone public. All these extra steps that come with going public is going to have a lot of extra costs associated with them when it comes to the people that have to really, do your financials, when it comes to the accountants, when it comes to the lawyers, the tax people. All those are going to be extra fees that you have to pay. So yeah, over time, if you start bringing in a lot of money and the stock price goes up, a lot of things can happen to where shareholders who bought in early can find their valuation to go down, get diluted. A lot of different things that, you have to really make sure that people who are investing in your company are happy. It's not just about simply running your business. It's about making sure that the investors are happy and they're going to keep investing. So you got really two jobs now. You got the business to run and you got the investors to keep investing. And the last thing that I would say is, you're going to be subject to whatever happens with the market, right? So usually what happens is, when the market is strong, a lot of stocks are going up. When it's weak, a lot of stocks are going down. You could have a situation where your business is running perfect, doing everything you're supposed to do, bringing in good profit, but the market's in a downturn, so your stock price is going down. And if your stock price is going down, then the investors are not going to be too happy in most cases. So really, it could be no fault of your own. It could just be that the market's in a bad place, and that's going to have an effect on you and how you run your business. So yeah, it's really crucial that businesses or people running businesses understand all these steps. Alright, so summing everything up, I would have to say that, there's really some levels to this business game that a lot of people really don't know. Hopefully I broke it down really easily so anybody can understand it. And you can always go and look into anything more specifically if you want to in more detail. If there's something you want me to talk about, go ahead and leave it in the comments. Make sure you hit the like button. I'm out. Peace.